We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to read the ticker of gold and silver ETFs. Now the first thing to notice about gold is that for 2 years in a row now it's had positive returns. So any investor, or especially fund manager or even the pension funds, can say get a minor gain on return. Now looking into 2018, quick review of the fundamentals. We might have a conflict with North Korea. We've got the Iranian situation warming up. We've got the fact that the bigger central banks around the world have the ambition of reducing their balance sheets to try to raise interest rates. That's when you've got a market who's living off morphine and you've got the central banks want to take morphine. So 2018 could be the year of, yeah, okay, we believe your central banks have been making money out of you for such a long time, but we're going to hedge. So 2018 could be the year of the hedge. I'm not saying the stock market's going to go down. I'm just saying the market may prepare itself, or those in the markets may prepare itself for a hedge. And thus, they will have to build up positions that are negative on the stock market going down. It's gold and silver, precious metals, probably crude oil, because obviously the dollar goes down. You want to protect your assets with non-dollar assets, crude oil, gold and silver, and palladium, platinum, and what have you, maybe copper as well. So what do we have here? What we have here is basically proof. If you want to buy something in the Wyckoff world, all you're really trying to determine is who is in control. Is there demand? And the way to determine if there's demand is to see what's happening when the price goes down. So we have a situation here, proof, yep, proof, and now we've got proof again. 3 times prices went down, and 3 times prices found demand. And my volume bars are showing me that the blue bars are better than the pink bars, which basically means there's more volume on the upswing than there is on the downswing. Quarterly momentum is looking positive, and monthly momentum is supporting it, obviously because it's some sort of quarterly momentum. So basically, we've got some strength here, some minor strength there, just a minor strength. And as you notice, we like to use our RTT steps, which is an automatic way of finding bases. We've got a nice box pattern here. See that? That's a base building up, and that base is, I think, it's 4 years. 1, 2, 3, 4, 4 or 5, 4.5, 5 years. There's nothing more than a Wyckoff investor wants to see is a massive base build up. Now, the reason why there's a massive base is because gold and silver are so small for compared to the fiat currency out there. Therefore, it takes a lot of time for funds to accumulate enough, or hedge funds, or whoever it might be, accumulate a large enough position without sending the market higher. They don't want to go and buy $100 million worth of gold, or couple billion dollars worth of gold in one burst, because it'll send the price up to around dollars. What they have to do, they have to keep price down and accumulate it over a period of time. So instead of using price that goes up, they have to use time to get to shake people out. And then, obviously what's happening is the fundamentals are catching up with the price, and people can't wait any longer. So this base period down here is about as has been used to accumulate. And why do we know that? Well, it didn't go down 900, 800, did it? No one sold off. So this has been used to accumulate over a period of time. And as we probably see now, the fundamentals are catching up with those who are trying to suppress the price, and it might just mark up higher. The last 2 years have had single-digit gains, I think, and I think in 2018 we'll probably get double-digit. That means 10 to 20% minimum. So probably looking at $200 up. So I would reckon we'd be pushing 1,500. So if we get over 1,500, well, all bets are off. But if we're not pushing 1,400 to 1,500 on gold, or 150 on 140, 150 on gold, I'll be surprised by the end of the year, because it's a hedge. Of course, I believe if the central banks fail with their shrinking of the balance sheet, or even if they launch QE, gold's still going up because it's a lose-lose. Anyway, let's have a look. So we've had demand come in. That's a good sign. Now this is a special RTT indicator. Now this is called the RTT OBV trend. Basically, you want to see this step up. You want to see volume push the high higher, and not too much damage. There's some pretty damage here, but as you can see now, the volume is starting to come in and step up here. We've never got any stepping up here. It is to do with the trend, but price and volume must move in a coordinated fashion. So when price goes up, you want to see volume go with price. You don't want to see any volume turn up at the wrong place. And this indicator shows that. So it's looking handsome, it's looking good. And here's my bigger box within the smaller box. Here's where we got a smaller box inside a bigger box. We've got the base and minor bases. As you can see, starting to look very handsome again. So the accumulation's coming in. And as you can see, I'll go down to a smaller chart. There's one here. I mean, it's pretty obvious. Demand turn up. Bit of a boring passage here. Some accumulation going here. A bit of a shakeout, and yes, as expected. I did a video on a sector review that was for members, and they got plenty of warning that this was to be an attractive situation for the gold and gold shares and stocks, what have you. The wave pattern looking good. The blues are looking good. Says that control test, the green versus the red wave. So everything's looking pretty good. So I believe that gold and silver are going to have a good year. Let's have a quick look at silver. There we go. And obviously, look, I'm looking at today's action. It's gold and silver's up $7.50, and silver's up 41 cents on the first major day trading of 2018. And yeah, it's quite surprising. Okay, look at silver. Gold will make you wealthy, silver will make you rich. Once again, silver's had 2 pretty good years, pretty much the same. Once again, the long base, as before, I've said. Gold and silver are hard to build up a position for of any size and amount. When you have lots of fiat currency out there, billions and billions of dollars, and you want to build up a 1 or 2% position, and you don't want anybody else to know about it, if you go in there too quick and accumulate, you'll send prices high too quickly. So what they have to do, they have to use time against the public. They have to use time against the weak hands. And time has been used. We've had 4 or 5 years of gold and silver price suppression to try and shake out the weak hands. As the fundamentals become glaringly obvious and the risks accelerate, and 2018 might be the year of the hedge, and to get to all those people who've not yet got a position, they're going to have to make some sort of move into the gold and silver market, and that will be seen because the market is tight. So if people are going to start creating a hedge now, these are the people who are starting to move through the door. We've had a couple of smart ones already do it, but now the crowd's starting to move through the door, so that basically means their hedging action will push this price up 10-20%. They're probably trying to suppress it. I mean, it'll go up 5 or 10%, back down 3 or 4%, up 5%, back down, what have you. So I'm just trying to say, people are going to accumulate, but it'll be quite volatile, which is what you'd expect. But I believe the end result, we're going to get double-digit gains in gold and silver 2018. And that's what I believe the market is. And once again, our volume indicator shows quite handsome. Bit of a shock here, but that's okay. It was held, was defended. And our bases are coming on up. So there's our big defence here. Look at that. Demand turns up, demand turns up, demand turns up. Terminal shakeout before Christmas. But the volume came in there. Look at that volume, and it dies off. Yeah, well, it's obvious Christmas holidays, but pretty handsome. For a situation where price falls and goes back to the consolidation zone, for example, this is the volume zone. For a price to fall and return and go past the middle, there's a horror. That is downright cold, hard turkey demand. I wouldn't be surprised if this pops up to $17, $17.50 on the SLV on the silver ETF. Because that is proof that demand is underneath this thing. There's nothing more that a buyer or accumulator of gold and silver is honestly dead sure proof that demand is under thing. Now, if you're a short seller and you've taken this down and you see this demand, you ain't going to stick around. You're going to be recovering your shorts. Once again, the wave patterns are strong. We've got no problem with that. Volume tools are looking great. Look at this beautiful base pattern. I mean, if you're a short on silver and you want to be bullish for the year 2018, you can see the defence of the price. Nothing wrong with that whatsoever. So, Yep, there you go. That's the gold and silver reading the ticker. Thank you for watching.